Hi everyone, welcome to Block Snack, your daily crypto wrap-up for Saturday, June 6th, 2026. We break down Bitcoin, Ethereum, and blockchain news, fast, clear, and without the hype. I'm Jack, and I'll walk you through what matters today. If that sounds useful, hit subscribe and follow the channel.
Block Snack.
Today we're covering 5 big stories: the wider crypto market sell-off and rebound signals, Bitcoin's latest Saylor debate and demand reset, Ethereum's DeFi infrastructure shift, Russia's new regulation and policy framework for retail crypto, and institutional adoption across ETFs, tokenization, and TradFi products. Quick reminder, this is an informational news update, not financial advice. Crypto is volatile, so always do your own research before making any investing decision. First up, the overall crypto market is giving us one of those classic whiplash moments. The research brief points to a major rout, with about $1.6 billion in liquidations, while Bitcoin managed to climb back above $61,000 after the sell-off. At the same time, market commentary from several crypto YouTube updates is leaning hard into uncertainty. One says Bitcoin swept below its February 2026 low, another frames the market as strangely underpriced, and another argues that people are quietly selling Bitcoin into the weakness. So the mood is messy, prices are stressed, retail confidence looks shaky, and traders are debating whether this is capitulation or just another bear market leg down. Now, let's zoom into Bitcoin, because Michael Saylor is right in the middle of the conversation again. CoinDesk reported that Saylor described 4 Bitcoin tribes: maximalists, who see Bitcoin as the ultimate monetary breakthrough; capitalists, who want Bitcoin embedded in treasuries, custody, and credit markets; technologists, who want careful improvements around scalability, privacy, and security; and fundamentalists, who defend decentralization, self-custody, immutability, and censorship resistance. That matters because the market is not just arguing about price. It is arguing about what Bitcoin is supposed to become. Ethereum's story this week is partly about price pressure and partly about what comes next for DeFi infrastructure. The brief says Ethereum dropped to a 13-month low amid negative sentiment connected to the disclosure of a major Zcash bug. That's important because security fear in one major crypto network can spill across the whole market, especially when investors are already nervous. On regulation, Russia is moving toward a much more controlled crypto market. According to the Russia Central Bank-backed framework in the provided sources and summary, most retail crypto investors will be limited to Bitcoin, Ethereum, and USDT under the new On Digital Currency and Digital Rights law, effective July 1st, 2026. That is a pretty narrow list, and it basically tells retail users you can access the most liquid, widely traded assets, but most altcoins are outside the permitted lane. Finally, institutional adoption is still the counterweight to all this market stress. CoinMarketCap's macro coverage says crypto has rallied on TradFi adoption, even as the broader market deals with oil moves, inflation concerns, and shifting rate cut odds. The research brief also points to Morgan Stanley's MSBT Spot Bitcoin ETF adding $100 million in inflows in its first week, Goldman Sachs filing for a Bitcoin Premium Income ETF, and Charles Schwab planning spot Bitcoin and Ether trading. That is a lot of traditional finance plumbing being built around crypto, even during a rough tape. That's it for today. Subscribe for daily crypto news, drop a like if this helped, and share it to support the channel. See you tomorrow for your next Block Snack.